The gentleman from Florida, Mr. Posey, is now recognized for 5 minutes.
Thank you, Chairwoman Waters. Chair Powell, when your former deputy, Mr. Quarles, came before the committee last May, I pointed out to him that just a week before the April inflation rate had been reported at 4.2%, the highest since 2009. The rate in March 2021 had been only 2.6%. I asked him if we were paying the price for monetizing a huge federal debt, what the late Dr. Friedman and former Chair Bernanke both called helicopter money. Mr. Quarles told me that he didn't believe the Federal Reserve was monetizing the debt. Mr. Chair, looking back a year, does the Fed continue to deny that it has been monetizing the debt? And do you believe that you should have acted before now to rein in the inflation rather than let it now exceed 7.5%, the highest rate since 1982?
So I think by monetizing the debt, what that means is for the central bank to purchase the debt with the intention of holding it. And that's not the intention of here. You know, we're about to start shrinking the balance sheet, and we will return the balance sheet to, you know, a size relative to our economy that it was before. So also that is not at all our intention. We purchase longer-term securities in order to drive down longer-term interest rates to support economic activity. I'd also say that that's not really what we think of as the source of inflation. Admitting that inflation, proclaiming that inflation is far too high and that we are committed to using our tools to get it back down, it's really about very, very high demand, particularly in the goods sector, related to a spending shift that happened in the pandemic, and supply constraints that we didn't foresee. International supply chains, labor constraints, low labor force participation, right across the economy. It's a very different kind of inflation story than we've had in the past, but it's one that we have to deal with, and we will deal with it.
Chair Powell, when you appeared before this committee in March of last year, and I asked you to clarify the purpose of the Federal Reserve collecting data and employing stress tests related to climate change, you assured us that the Federal Reserve would be collecting the information to help financial institutions learn about climate risk and wouldn't be using the information for regulatory purposes. In recent weeks, considerable controversy has emerged in the confirmation process to fill 4 vacant seats on the Federal Reserve Board. One of the nominees has a record of advocating for aggressive Federal Reserve regulation related to climate change, including actions that would regulate capital allocation away from fossil fuels. I won't ask you to comment on the confirmation process, but can you continue to assure us that the climate data and stress test proposed by the Federal Reserve won't be used for regulatory purposes and driving investment away from traditional energy sources here?
We call them climate stress scenarios, and we haven't, you know, we're actually just building the capability to do this, and the idea is not to use them the way that we use the traditional stress tests to set capital levels, in effect. The idea is more to allow financial institutions and also regulators to understand better, you know, the extent to which and the ways in which climate financial risks has any implications for the banks. That's the purpose of it. I'll add, though, that it is not our job to tell, we don't think, to tell banks which legal companies they can and can't lend to, and I don't see that as an appropriate role for us.
I'm really glad to hear that. So that's an absolute, unequivocal, guaranteed answer that the data will not be used for regulatory purposes in any way whatsoever.
I can just say that, first of all, we're not even doing the tests yet, or scenarios yet. But certainly that's not going to be their construct. The construct will be what I said, which is to help us understand better, not to set capital or otherwise put further regulatory requirements on.
Thank you so very much. I deeply, deeply appreciate that, and I yield back. Thank you.
Thank you very much.